It's freaking almost June. It means like almost halfway through the year, which is crazy. So happy end of May. Let's not get too far ahead of ourselves. I think we got a really good one this week. I really do. Some weeks I tell you there's so and so. This one I feel like we're pretty good. So here's the reality. Rates, yeah, geez, still high sixes, right? According to Mortgage News Daily. You can see that in the last week or so, we've had a good little run, little bounce back up, and ultimately what we did is just kind of got back some of the bad, pardon me, the losses from last week. So again, remember, green is good. Like higher here means lower rates. But you can see in the little squiggly lines, the 100-day moving average, that purple line is right above us. That's not good. And right above that's the 50-day. That's not good. And above that's the 200-day. That's not good. So I don't know that we're going to see better rates anytime in the very immediate near future. But maybe longer term, we will see. So here's why. So one, the PCE, that's the one of the two big measures of inflation that the Fed loves, comes out tomorrow. They think it's going to kind of stay around the high twos, give or take, for the year-over-year estimate for the core. What I found here is I like this 3 month average, the red. You can see that unfortunately, the PCE has been trending higher. So meaning like inflation has been going up. So it is what it is, but it's still in that high two range. We'll see how that goes in the future. Hopefully, tariffs, all that stuff, we'll see. I don't know that that's going to be good for inflation, but we'll see what happens. But here's what I do like. This is my boy, Scott Bessant. He's a Treasury Secretary. He's saying things that no other Treasury Secretary has said that I can remember in terms of just really smart. The dude's really, really rich and he ran like hedge funds and all these other whatever things he did. So the guy knows money. So one thing he's trying to do right now is adjust the what's called the supplementary leverage ratios, the SLRs. I just know it's like the bank ratios, like how much like banks have certain requirements and restrictions for what they can and can't invest in, for how much cash and capital they need to hold. So there's all these different ratios they have to have and use. Well, he's trying to adjust this SLR. Well, what it would do is it would allow banks to then purchase treasuries. So it kind of free up some cash that they have to be able to then buy treasuries. And treasuries, specifically the 10-year, a lot of times mirrors mortgages. So if suddenly more and more money starts to buy treasuries, 10-year treasuries, that would drive rates down because supply and demand. So you don't have to pay as big of a yield if there's more of a demand for it. So what that would do, in theory, would help mortgage rates. I think he was quoted saying like tens of basis points. So, for example, if rates are at 6.9 or whatever we saw there, and they go down 40 basis points, that means rates go down to 6.5. I'll take it, right? We'll take anything we can get. And here's the spread. So, meaning the difference between where mortgage rate is, that's the MBS, mortgage backed securities, and where the 10-year treasury is, historically has been around, you can see the middle of this graph where most of the line shows up, is around that 1.5 to 2% range. So kind of that 1.6, 1.7, I think is kind of the average if you take all this into consideration. And this goes back to 1976. You can see right now it's closer to 2.5. So what does that mean? Well, if treasuries are at, let's just say 4.5, they're not there right now, a little higher than that, but let's say the 10-year treasury is at 4.5. If the interest rates, mortgage rates are 2.5 higher than that, I mean rates are at 7, 4.5 plus 2.5, rates are at 7. That's about where they are. So if he were to get this to where the spread goes back to quote unquote normal, which is what he's referencing, let's say it's a 1.5, 1.7, if the 10-year treasuries at the 10, if it goes down and this spread, this gap closes to be more normal, even if it went, from 4.5 to then this is the 1.5 instead of 2.5, that's normal. Like rates should be in theory around 6% right now. 4.5 plus the average of about 1.5, 1.7. Rates should be 6, 6.2 is where they should be. So there's this big spread right now between the 30 and 10-year. And he knows that, and he's mentioned it, and that makes me happy. It doesn't mean anything changes today, but at least means that the man knows it. He's working, trying to find solutions to get to where things are quote unquote more normal, where rates can and should be lower. So time will tell. Stay tuned. And then the other big news, President Trump and all the powers that be said that if and when, it's not a high priority, but if and when they get Fannie Mae and Freddie Mac out from conservatorship, I mean, like right now, they're still kind of like quasi-owned by the government. But if they can get that out, they did make the very important comment that they would still be backed. What did they say? with the guarantee of the government, which is good, right? So I did pull this up just because I think it's funny because I remember back in the mortgage meltdown days when the stock was like $8. FNMA, that's Fannie Mae, the graph on the right. This is they're publicly traded. You may or may not know that. Uh, it's around $10, 10.45. And if you can see the little chart and look at the little chart on the far right, how things have ticked up in the last couple months because Trump has been making these announcements. That's the plan and the goal. Heck, it's up 548% all time. But the reality is, look back in the pre-mortgage meltdown days, the stock was bouncing around 60 to $80. So if you want to, take a little gamble and have some play money, go for it. The FHLMC, that's Freddie Mac, Federal Home Loan Mortgage Corporation. That's the bottom left. They're at $8, $7.79. So you see how the graphs kind of mirror each other. So you do you. This is not financial advice. I'm just saying if you want to pay attention to it, I will be. Featured mortgage mark program or feature of the week, and it's gift taxes. So gift funds. We've had a lot of folks, mom and dad are happy to help give somebody money. There's a right way and a wrong way to do it. Please, 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 check this out. Reach out to us if you have questions. We'll get you that. Just go to mortgagemark.com, look up gift funds. There's a right way and a wrong way to do it. Briefcase of cash, wrong way. So, well, and it depends on the program type, whether they want you to wire the funds or put it in a bank account or just wire directly to title. So please check that out. Let us know if you have any questions. And then for the fun, this dude, this random dude, decided to volunteer and do human trials, or not human trials, sorry, but this guy Tim. I guess scientists gave him like 200 snake bites to for venomous, good grief, say that three times fast, poison. They gave him 200 poisonous snake bites so that he can help create some vaccines and some cures for potential snake bites in the future. So they're working on the antivenoms based on his immunity and all this other stuff. So good for this dude. I'm glad it's him, not me. And then the meme of the week, hard to tell, had to blow it up, but the realtor. And this is a little dig, and it's not meant to be, but it is funny. Because we even got loan officers to say the same thing, which is, hey, I'm sending you this client. Should be an easy loan. Slam dunk is what I hear often. Hey, got a slam dunk loan. I'm sending it into underwriting. That's what loan officers will say. And then in this case, you actually look at the loan. It's a little car thing falling over with a kid in it. But the reality is it could be a dumpster file too. Anytime I hear somebody say this is a slam dunk, I'm just like, oh man, it's a jinx. And I don't believe it. So last, evidence of success. You know who you are, a real estate broker that we work with. Sent this wonderful testimony this week about just how great we are, and we sincerely appreciate you. So if you do have any thoughts about setting the Mortgage Mark team business, we would certainly love to see it. And if you want to share, forward, subscribe, all the fun stuff that goes with this video, we certainly appreciate that too. Here's how you can find us. Let's get social. Let's be friends. Come on, everybody. If you need something from us, you know how to reach out. Grab us, mortgagemark.com or any other ways. Great. And remember, when you think mortgage, think Mark.